Greetings, it's your helpful housing analyst, William Leach, bringing you the calculation for tax credit proceeds. If you haven't already, pause the video and read the companion white paper that this video accompanies. Let's dive in. Before we get to a few calculations and scenarios, a bit of housekeeping. In this financial model, purple cells represent cells that should be calculations in your model, but in this example, they are inputs. Typically, blue cells are inputs, black cells are calculations, but in this example, these purple cells will be inputs, but they should be calculations in your model. Also, want to point out that you'll see inputs and calculations mixed throughout this example. Typically, I recommend having your calculations separate from where your inputs are, so it's easier to calculate and easier to input. All right. Let's move in. The basics of calculating tax credits is taking your eligible basis, multiplying it by a boost if you deserve one for the high cost area, multiplying it by the percentage your project has affordable units, multiplying that by the applicable percentage that the IRS publishes, multiplying it by 10 so it turns from an annual number to a total number, multiplying that by the ownership percentage of the investor's ownership portion, and then multiplying that by the tax credit price per credit. So for example, we'll come down here and do a very simple version. The product, meaning the multiplication of all of these things. Let's take our requested basis, our boost, our applicable fraction, our applicable percentage. Let's do 10 for 10 years. Let's multiply it by the ownership percentage, and we'll multiply it by the 95 cents. And what do we get? We get 20 million, just like we would with the more sophisticated model. However, there's some more nuances than just that simple calculation. For example, your federal acquisition basis is never going to get boosted. It's always going to be 100%. Furthermore, the acquisition applicable percentage and the 4% applicable percentage, it floats on a monthly basis. The state percentages change compared to the federal. They are either 13% for a 4% deal or 30% for a 9% deal. They're not the same. Also, state credits aren't going to get a high cost area boost like federal credits for acquisition basis, won't get the high cost area boost. And there's a handful of nuances. Sometimes you're eligible for state credits, sometimes you're not. And so we're going to get into the logical functions that are used to either qualify or disqualify someone from state credits. Let's take a look at this transaction. This transaction thinks that this project does not qualify for state credits. You'll see we have 18 million of eligible basis, and none of that is getting counted in the state credit column. Now the reason for that is this is a bond deal and we're not competing for state credit. So I take that back. It's not because it's a bond deal, it says bond deal no. It's because we're in a QCT. We're getting the 130% boost, and you don't get both the boost and state credits. Had we not been in a QCT, right, we would get our eligible basis in the state credit column, and then we'd start calculating how many state credits we could get. Okay, so how are we achieving this? How are we getting this to be 0 or 18 million depending on this cell being true or false? Well, the way we're doing it is we are multiplying the amount of basis times the true or false test. And true and false is a Boolean variable. It's true or false, on or off, 1 or 0. And when you use such a variable with arithmetic, it turns it into 1 and 0. So it's taking 18 million, timesing it by 1, and so the 18 million is carrying forward. Let's take a look real quick. We'll go formulas, evaluate. It's saying B6 is 18 million. I times it by true, I get 18 million. If we were in a DDA, so now we're getting the high cost area boost. This cell, when we evaluate it, says 18 million times false is 0. Okay, so let's get into how do you determine if something is eligible for state credits? How do you make that calculation? Now you'll notice there's a lot of words up here, so let's break it down and try to make it simpler. There are three ways. I'm using the OR function to say there are three different ways that you could be eligible for state credits. Let's look at the first one. So I click the logical one, and it shows me a test to see if it's eligible for state credits. Whenever you read logical functions, it's important for you to not read the function name at the beginning, only read the function name when you see a comma inside the function. So here we're going to read this as you're not a bond deal, or you're a 9% deal, and you're not in a high cost area. Okay, so you'd be eligible for states if you're 9%, not in a high cost area, not getting the boost. Okay, that's one way. What's another way? This comma right here, or you could be a bond deal, you're competing for state credits, and you're not in a high cost area. Bond deal and competing and not in a high cost area. Okay, the third way, or this comma right here, you're a 9% deal and you're a special needs deal. Okay, so this logical test gives you three different ways. Those three different ways have some requirements, but either one of those ways can make it true. And if it's true, your basis will be counted in the California New Construction Rehab Basis column, and it'll calculate and turn into credits. Okay. Now, another thing I'd like to show you is sometimes you ask for more credits than you're eligible to ask for. If that's the case, you're going to get disqualified. For example, your threshold basis limits. Right here, we're requesting 18 million, and our threshold basis limits is 20. But what if the threshold was less? What if it was 16 million? Okay, we'd be asking for more credits than we're allowed. So this cell down here is trying to say, hey, wait, don't do it. I'm going to force you to exclude some of your basis. Here you would voluntarily exclude basis. Here it's forcing you to exclude basis so that you're down to the 16 million and you're under the limit so you don't get disqualified. Okay, so this cell, how do you calculate it? Well, you say, what's my request minus what's my limit? $2 million. Therefore, you better exclude $2 million. Now, in the other direction, let's say we had an adequate amount of the threshold basis limits. Let's say we had 20 million again. In this case, 18 minus 20 is negative $2 million. Why do we get a zero? The reason why we get a zero is because we don't want negative numbers. We don't want to force a negative forced exclusion. And so how do you not get a zero? You use the maximum function. You say, okay, I want to do the maximum of either 0 or a calculation. Now this calculation would normally have returned negative 2 million, but the maximum of 0 or a negative number is 0. Let's go ahead and evaluate that function. 18 minus 20 is negative 2, but the maximum of 0 and negative 2 is 0. And so we avoid having a negative number there, and we avoid forcing a negative exclusion. Okay, so let's talk a little bit about some scenarios. Let's pretend that we have a 4% deal, so it's a bond deal, so let's turn this to yes. Let's pretend we're in a DDA or QCT, so we're getting the boost. And let's pretend that, we'll just leave it, $18 million. No, actually, let's do an AC rehab deal. So we'll do $8 million of rehab, and we'll do $10 million of acquisition. So we acquired buildings that have a value of $10 million, and we're going to do $8 million of improvements. Okay, so we're going to get both acquisition basis and we're going to get new construction basis. But notice, even though we're in a DDA, even though we're eligible for the high cost boost, it's only going to turn into the boost in the federal column. So our 8 million gets boosted to 10, but here our 10 million stays the same at 10. Okay, because we have 100% of our project is affordable, we get to keep our 100% applicable fraction, and we're going to retain those credits. And then let's say the applicable percentage this month is 3.24. Or actually, no, let's say that it changed. Now it's 3.23 this month. Okay, we'll change the factor. And we're going to get credits from the acquisition side. We're going to get credits from the new construction rehab side. Combine those together, and we have 658,000 annual federal credits. Now, since they're annual, you're going to get them once a year for 10 years. And so we're going to multiply that by 10 to get a 6.5 total credits. Our investor is going to have a 99.99% ownership in the partnership. And so they will receive 99.99% of these credits. And they're going to pay us 95 cents on the dollar for them. Actually, no, let's say they're going to pay 98 cents on the dollar. Okay, with these assumptions, we don't get any state credits because we're getting the boost and because we're a 4% deal. But with these assumptions, we're going to generate $6.4 million of tax credit proceeds. All right, now let's look at a scenario where we're a 9% transaction and we're not in a DDA and we don't get the boost. So let's say, no, we're not in a DDA, we're not in a QCT, we're not a bond deal either, we're a 9% deal, and we're not competing for 4% plus state. And what do we want to do here? So let's pretend that we're not a rehab anymore. Let's go back to being new construction project. So we're a new construction project. We're not getting the boost. So if you don't get the boost, you are going to get state credits. And we're going to calculate down. We're going to calculate down and see how much state credits and federal credits that we generate. Okay, notice that because we're a 9% deal, the applicable percentage is 9%, which the federal government locked, and it's not floating at this point in time. And then notice that we're getting 30% as a multiplier for our state credits. 4% deals use a 13% multiplier, and 9% deals use a 30% multiplier. So we're using the 30% multiplier, and this basis is going to result in 5.4 million state credits. Now, state credits aren't like federal credits in that they're annual for 10 years. State credits are generally enjoyed over a 3 to 4 year period of time. So we don't talk about them in an annual expression. We just talk about them in a whole number. So this is 5.4 million total state credits. This is 16 million total federal credits. And if we sell them for 98 cents and 80 cents respectively, we will generate 20.2 million. I pray this financial modeling example proves helpful to you in delivering housing to Californians. God bless.